Good morning. I wanted to talk this morning about what I'm looking at here for the week ahead, August 31st, 2015. And boy, have we had a wild ride in the markets. This is a one-year chart of the S&P 500, and last week was a very, very volatile week of trading. The week prior was when the sell-off really started and accelerated, but last Monday morning, futures at one point, well, at the market at the open, the Dow Jones Industrial was down about 1,000 points. And for a lot of people, last week was a week, especially if you're long in this market, of going out and finding stock opportunities. And I did take that opportunity last week, making some what I feel are conservative moves, with AT&T and Kinder Morgan being two of the stocks I picked up last week. One thing I'm looking at this week, one of two things, and that is first volatility. Volatility as of this morning is the volatility index is around 26 to 28. It's probably going to trade in that range today unless the market changes substantially. One of the things people can do, and I've elected to do it through an exchange-traded fund, is to short volatility. I believe that what's going on in the marketplace right now is short-term. It does not have long-term economic effects. While the systems and processes being scrutinized globally in our economy can come back to bite us, I believe that if they do, it's going to be 2 or 3 years down the road. So I'm looking at picking up an exchange-traded fund that shorts volatility. Volatility index, the VIX, typically trades in the mid, maybe even low teens in a really, really good market, such as up in here. And so that's one of the things I'm looking at this week, hopefully to pull the trigger on it today. The other thing I'm looking at, in the event, and I'm going to focus on this column right here, in the event that I wanted to look for more stock opportunities after the bounce back that we had last week, I would look at the relative strength index of certain stocks. And these are S&P 500 stocks. I know one that jumps out here is Navient. They are 10th or 12th in the S&P 500 in terms of the relative strength index. But the problem I'm having with Navient is they're under a federal investigation right now, and they're highly leveraged. So I'm not going to touch that stock. And the relative strength index, in my opinion, this week isn't the be-all, end-all of making a trade. It is to give you an idea of what stocks you should be honing in on. Here's another one that I'm not going to touch either, and that's Deere. Deere's a good company. They're just in a bad industry right now. And so that explains why the relative strength index has been beaten up. You really want to find stocks in here that have been shellacked over the exact same concerns that have hit the market. Wynn Resorts is having some bad data related to the company, which is causing it to be beaten up. Again, another one you may want to avoid. But if you find something in here that's really tagged to our current fear situation, it may be worth holding or picking up and holding for further bounce back. As of right now, specifically, I'm not seeing anything. It's just where I'm looking. I haven't gotten to the point where I've wanted to do further research on any of these companies. However, that may change as the week goes on. I wish everybody a good week ahead and happy investing.